Why Warren Buffett is sitting on $325 billion cash pile? See, there could be 3 reasons to it, and in today's video we will try to know all of them. Let's begin. First reason, which many of you may be thinking, that as Warren Buffett has gotten older and he is now very near to score a century in his age, then he wants to play safe. That's why he is not taking risk and holding his position on cash. So before he dies with the maximum amount of profit he could have. Otherwise, if he dies when the market is experiencing a crash and his position is in minus or in little less profit than in current, then his record will be broken. That's why he wants to play safe and he is trying to play defensive, scoring 1-2 runs, but wants to complete a century. But it's not like that he wants to complete a century. So like how? So the second points come. It may be because economic recession. Warren Buffett is having some insights from inside, intels that economy is going to experience some crash or economy is going to do bad. That's why he is trying to sell and trying to predict the market. So when you analyze his cash pile in normal chart, it seems like that his cash pile is very huge, but when you convert it to the assets when he was having to the cash pile, the ratio when you make it, then it seems like that he is not currently having the highest amount of cash pile now he is having, but the cash pile does not signify any economic crash, any economic recessions. As you see in the chart on your screen presented, that in 2006 also he was having a record amount of cash, but did market crash? No, market crashed 2 years after that, and at that point he was not having the maximum amount of cash. And not just that, if you see 2001's chart, and if Warren Buffett would be knowing, then he would have not have maximum amount of record amount of cash on 2000's market, but on 2007's market, and the graph should have seen like this, but it's more like this, and it's 2 years before the crash. And even if you see 2001's chart, at 2000's chart, at that time he was not having the cash pile, he was barely having some amounts of cash. But if he would be knowing, then he should have been having cash, and he should have bought it on 2001's crash, the dot-com bubble crash. If he would be knowing that there is a crash coming in future, he would have been having position. So the chart signifies that no, Warren Buffett is not trying to predict the economic recession or anything from it. So it takes us to the third point, which is Warren Buffett might be thinking, or it might be looking from the fundamentals, that his price has reached an overvalued price. As Warren Buffett is an value investor, his theory is taken from Benjamin Graham book, that buy cheap and sell high. On the basis of what? Which you will decide that the price I am seeing is cheap, the stock I am seeing is cheap and it's expensive. By seeing the price of 200 and seeing the price of 2000, that just tells that the stock has gotten expensive or it's cheap. No, it does not. You have to see the valuations and you compare it by growth, ROE, dividend, book value, assets, growth rate, debts, and company having changing plans, many things decided that why he is selling, and the value also. So from that all fundamental ratios, Warren Buffett might be reaching a very high amount of, Warren Buffett's stocks might be reaching a very high amount of valuation, which he is thinking is okay to sell. There are two reasons to sell. First is to sell in investing, not in trading. First is to sell when you are getting another higher opportunity, and second is to sell when the opportunity is saturated, when the opportunities is juiced out. Now the lemon, put it on road and rolled a steamroller, roller over it, then also any bit of juice is not left in it. If it is, then who will experience who will give the price of road roller, steamroller? So that is the second way, and the first way to sell. So what might be having in Warren Buffett's case is the second type, because he has not invested his current cash into any other share. So the present shares of his is getting the right valuation, that's why he might be selling. And another thing which also makes it him to sell is when you are having such a big ship, understand his portfolio, his company as a cruise ship, then you need to turn it way before than the actual turning, and the turning is a lot different than how it should be. In small boats you can turn it very easily, but cruises requires the help of other boats, and it turns very slow. So far from it might be looking what he is doing, but he might be just turning his portfolio. And when the things are so big, it has to be required to get ready 1 month, 2 months, 3 months, 6 months earlier than the actual opportunity. One quote is very famous: when you don't find opportunities, it's better, not opportunities, when you don't find ideas, it's better to keep your money in your bank account till you find an idea. That might be what Warren Buffett would be doing, following his own theory, although he follows it very less. Now he follows, but earlier his theory was a lot different. After leading to Benjamin Graham meeting, and as his money growth got larger, the style changed, and from age also wisdom comes. It might be because of wisdom. So conclusion of this video: Warren Buffett is not trying to play safe. Warren Buffett is not predicting any recession, economic recession, and it is because his portfolio is so big, it seems like that he is trying to play safe or protect, trying to avoid an economic recession, but he is just following his own principle of value investing. And when he finds a better opportunity than Apple at its valuation, current valuation, then valuation also gives a very better idea. Doesn't matter how great the company is, if it's available at a very higher valuation, then it becomes of no use. Doesn't matter you are having Nestle of 150 ROE, but if it does not have growth, then doesn't matter if you have Nestle with 30% growth but at the P of 100, the 90, then it doesn't matter. You have to get companies at reasonable valuation with growth and ROE and the other things to make it a justified investment. And in the case of Warren Buffett, the value part, the value metrics would have gone way higher in his investments, and he is trying to avoid his principles. He is trying to avoid doing things against his principles. So that's it was for today's video, And if you want to know anything else, and if you are having any doubt, or you want to ask any question to me, you can always comment in the comment box. If I like your question, I will take it, I will get an idea from it. And if you want to know that how everything is right and how the biggest knowing is that I don't know how the world is false, is magic, it's mithya in Hindi, it's maya in Hindi, then you can watch the video which will come here. And if you want to learn fundamental investing, then you can watch the video, watch a playlist which will come here. Thank you. And if you have enjoyed, then you can like, share, subscribe, and I will be very pleased if you do so.